the day. But let's shift focus then. Let's talk about some of your personal finance queries. We have Feroze Azeez of Anand Rathi Financial Services with us in the studio today. And we have a first query as well. We have Satish Venkatraman who's writing to us from Bangalore. He says that he can invest 7 to around 8,000 rupees per month in mutual funds. His time horizon is 10 years. So Feroze, what's your advice?
So I think if you have a 10-year time frame, these are the ideal times to actually start accumulating equities. So Satish, I think I'll recommend you equity for entire 7 to 8,000 rupees because you have a long-term time frame. So you can look at investing in 2 large cap funds and a mid cap fund. In the large cap category, you can look at ICICI Focus Blue Chip as the large cap, and the Mirai India Asset Opportunities, which is another large cap. In the mid cap category, you can look at Religer Invesco Mid and Small Cap. These 3 funds are all good, and I think next 4-5 years you will not have to worry once you invest in these. Satish.
Okay, and anything in particular on debt that you would recommend, Satish?
I think
just because there's so much interest in debt now with likely interest rate reductions, which ones would be appropriate now?
See, I think looking at some of the companies' balance sheets being a little stressed, taking a credit risk would not be a very wise idea at this juncture from a debt perspective. So looking at dynamic bond funds, which actually have a stronger company's papers, but they play more of interest rate risk. So you can look at a Birla Dynamic Bond Fund as one of the funds which can actually benefit you from a rate movement downwards. And I'm sure because there is 3 years kind of an investment time frame which you need to look at debt because of taxation efficiency only kicking in then. I think 3-year time frames, buying yourself a dynamic bond fund with softening interest rates like Rima was mentioning will actually benefit you, Satish.
Okay, that's the advice for you, Satish. Let's move on then to the next query that we got. Rahul Bhaktiapuri has written to us from Maharashtra. He says he can invest 1 lakh rupees in gold. Now, he wants to know if this is the right time to do so. Feroze, we've got similar queries now for I don't know how long. Ever since, gold started correcting, everyone wants to know, is this the time to invest? Is this the time to invest? What would your advice be? Again, differentiate in consumption and investment?
Yes, I think gold today, because gold is a commodity which can be consumed in the form of jewelry and other gifts and stuff. But I think if it's investment, pure investments, there's no financial rationale to actually get into gold today because over a period of next 2-3 years, I'm sure the prices could be marginally this way, that way. But I think from a IRR perspective, from an annualized return perspective, equities will do significantly better. In fact, debt will also outperform gold. So having that in a portfolio will be a laggard. Of course, there is an argument that it can actually be a hedge to your portfolio, but that I think in those smaller quantums, actually that doesn't serve the purpose of hedge. If you have 5-10%, that doesn't help. So I think you should stay away from gold for the next couple of years. And once you have some degree of bottoming out of gold prices in the dollar terms, then I think you can start building gold in your portfolio.
All right, Feroze, thanks so much for joining in. In fact, solving all our queries. Remember, you can send in all your personal finance queries. Just send us an SMS on 51818 or log on to moneycontrol.com and post your query there.